That I'd like to mention too, in my interview with Judy Shelton, I asked her some tough questions. And I said, what about the gold not being audited? And she says they always come up with these stupid excuses, too expensive and logistically challenging. And she's like, that's hogwash, where the United States spend a few $1,000,000 and get it audited. And that's what she would advise. And I asked her about revaluing gold, how Cynthia Loomis, she said she's a big fan of Cynthia Loomis, Senator Loomis from Wyoming, and an advocate for what she's talking about, revaluing gold. She didn't go out and fully say it, but she more or less said, yes, that is a strong possibility, and that they would issue, she believes, on July 4th, 2026, which is the 250-year anniversary, they will issue, Trump will issue 50-year treasuries pegged to gold. And then she said something very interesting as well. She said, and then I could see stable coins being issued backed by the 50-year treasury collared with gold. And this is a woman who could very well be in the Federal Reserve. She was an advisor to Trump. He wanted her to be the head of the Fed. She's very smart. And I think the bottom line is that when I look at everything I see all this talk of crypto and profit and greed and risk on, and the central banks are doubling down on their gold acquisition, hand over fist. And 45 million ounces of silver delivered off of COMEX, either through flat out delivery or exchange for physical in the month of December. Who's got that bread? Where's it going? So we're getting to a point where I think these countries, and they're going out of their way to hide it. Saudi Arabia got busted for not reporting it to the IMF. Sorry, we made a mistake. Well, the import-export numbers outed them. Same thing with China. A recent article just came out in Reuters the other day saying that they think that the numbers they've been buying are 10 times understated. 10 times. And that they have never stopped buying all along. When they said they took those few months up, no, they didn't. They just were hiding it and buying it directly from the miners or buying it through the People's Liberation Army. So you see a concerted effort to hide the de-dollarization and to mask it. And after what the BIS did to the BRICS nations at the 12th hour by pulling out of Enbridge, saying we can't work with a country being sanctioned, forgetting that Russia was the R in BRICS, after 4 years of working with these countries to develop it, I don't blame them for being less than forthright. But the one thing that I see through all of this is that the central banks keep buying gold and possessing it, repatriating it. And when I hear someone like Judy Shelton say that's in our future, then I would simply say, especially for those retirees, if you've made a nice profit along the way, get the hell out. What do you got to lose? A lot more than you have to gain. And especially when markets are at all-time highs and the insiders are selling 6 to 1. What more do you need to know? And that would be my biggest piece of advice. And everyone is so infatuated with risk on. That's the exact time. If you were having a beer with Rick Rule right now, he'd say that's the exact time to move the other direction. And that's what a contrarian does. So one of these times, this broken clock of ours will be right. And even though gold was up 30% this year, it feels like it didn't do anything, right? Because we live in this instant gratification, triple your money in 3-week environment that's going to hurt a lot of people because that's what they believe investing is. And my whole career, 35 years, says, no, that isn't what investing is. And no, this isn't different this time. I think there's just a lot to be cautious about, truly do. When I follow who's been buying gold, I look to the central banks. When I see what's going on in the stock market, I see the insiders selling at a 6 to 1 clip versus buying. In other words, corporate insiders are, for every one purchase, there's 6 sales. And you look at guys like Bezos, who sold 12.5 billion recently, Zuckerberg, who sold 2.5 billion worth of Meta. You look at the Nvidia insiders selling over 2 billion worth of sales. This is all year to date, but just between Zuckerberg and Bezos alone, you're at $15 billion sold. And if the economy was roaring and we would expect the stock market to continue on this massive train moving forward, you wouldn't see that happening. And so as corporate execs are cashing out, individual investors aren't. That's a premise that I would start with, that I would be very nervous. I think we can look at the bond market, which in and of itself is getting nervous as inflation concerns are again reemerging, and they really never left. I mean, the Fed pivoted, at 65, 70% away from their lofty target rate. was making a joke about this the other day. You're taking a cross-country trip from California to New York, and you stop in Omaha and say, we're there. You know, we're 70% of the way there, but that's okay. That's good enough. And the point of it is that they haven't signaled victory on inflation. They've waved the white flag on it. And we can see that happening as the 10-year Treasury keeps going higher. In fact, the 20-year Treasury, which is something we really don't talk about very often, eclipsed 5% here just the other day. That's a big deal. That's a problem. We're getting into that point where the economy is going to start to shake and rattle, and we're seeing that with all of the longer duration maturities. And so what does that mean for the economy? What does that mean for the bond market, for the ballooning U.S. debt? And what does it say about the flood of new Treasury securities that the government's going to have to sell? Who's going to buy them? Does that mean higher rates yet still? Are we in store for a yield curve control, which will again exacerbate inflation as we create money out of thin air by the Fed to buy the debt because no one else wants to buy the debt? And then you look at all of the metrics by which we gauge, are we heading into a recession, which would negatively impact stock portfolios and whatnot. And by every single metric, and then some, we're there. The reinversion or the uninversion of the yield curve, the Claudia Sam rule, the increase in money market holdings, which is up to over $7 trillion. All of these things have accurately predicted recessions in the past. And so if I were at that point where I'm very quickly going to be receiving money out of my retirement, I would not have a problem with pivoting. I would not have a problem with selling all of those stocks in my IRA that I made a lofty profit on. Get the hell out of them, just like the big money is doing, before something happens that forces you to get out. Get out now, and I would layer it into incredibly short duration treasuries. As crazy as that sounds to me, I don't know where else you go where you can feel safe and sleep well at night in a market, but every single metric is classically and historically overvalued, and the insiders are bailing ship, and the long end of the bond market moving higher, where the banks who bet again that wouldn't happen are going to be on the wrong side of that bet, especially if rates really start to move higher, which I expect that they will.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.